Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is a central administrator for private retirement schemes. Kelvin Wong, Senior Market Analyst at Oanda, is our guest today. Kelvin, good afternoon.
Hey, Governor Brian, and good to see you again.
Yep, Kelvin, great to have you on the show again in your new role at Oanda. Before we get your insights, Kelvin, let's take a look and see how markets across the region are performing. And we start off with cryptocurrencies. Bitcoin has dipped below the 30,000 mark. It's 29,966. It's down 0.47%. Ethereum is at 1,865. It's down 2.79%. Looking across the regional stock markets, we start close to home with you, Kelvin, at the SGX. The SGX is down 0.4%. Bursa Malaysia, the KLCI, is down 0.19%. Shanghai is up 0.42%. The ASX All Ordinaries is up 0.43%. The Nikkei is up 0.56%. The Hang Seng is down 0.64%. And rounding up the numbers, we've got the Kospi, which is up 0.07%. Kelvin, your view on market performance in the first half of the day?
Yes, so if you look at the market performance of the major stock indices in Asia, it's pretty mixed. And one of the reasons why is because traders are actually looking out for this important, crucial US economic data that will actually dictate the US Fed monetary policy for the rest of this year, which is the CPI data for March. So now let's take a look at the trend of this US key inflation rate data, which is the CPI data. Let me share it. So what we could see over here is that since June last year, it has been declining steadily for 9 consecutive months. So for the month of February, it's at 6% year on year. And market expectation for this coming March data, which is released at 8:30 Singapore time later, will be 5.2%. So if this come out as expected, it will be 10 consecutive months of straight decline in US inflationary data, which is the CPI. That means, i.e., is telling us that the US economy is now cooling down, so inflation pressure will be lesser. So that actually increases the bets that the US Federal Reserve will actually stop increasing interest rate after the May FOMC meeting. And markets now are just expecting a peak of the Fed fund rate at 5% to 5.25%. And what's interesting over here is that market actually betting against the Fed forward guidance that they actually start to actually cut interest rate in July this year, with an accumulated total cut of at least 100 basis points before the year end. And interestingly, that actually causes the Nasdaq 100, which is pretty much sensitive to interest rate expectation, to actually rally 20% Q1 this year, which is actually outperform far the rest of the world major stock indices.
Now, Kelvin, then looking ahead, then what should we be watching out for, particularly from Asian markets?
Yeah, so what I'm expecting over here, there seems to be an underappreciation of what's going on in the oil market. So that actually have an impact on what you call it forward-looking inflation expectation. So what we are seeing, this chart is actually lagging, is what happened in the past. So
yes,
if you look at the forward-looking expectation, right, this chart over here, the blue line and the orange line are actually 5-year break-even inflation. So in a nutshell, it's telling us that what is inflation expected to be in 5-year and 10-year time.
Okay.
Right. So we could see over here is that it actually moved in line with oil prices very closely. So with the recent OPEC Plus decision that was actually made 2 weeks ago, surprise production cut, that led to the future inflation expectation to actually inch up slightly higher since the start of April. So that has been kind of being underpriced in the market. So if market starts to actually price in such scenario, or such scenario start to take shape more pronounced in the later part of the year, that could actually dampen we call it future interest rate cut expectation from the Fed. So that could actually impact the price of the Nasdaq 100. So potentially we could start to see a bit of profit taking given a huge rally that in Q1. So now lastly, very quickly, let's take a look at the chart, the technical chart of the Nasdaq 100. I want to share with the audience is since this short rally on late December last year, it has been configuring what I call a bearish ascending wedge configuration. So in technical analysis speak, it's actually we call it potential bearish reversal. So I'm watching at this key we call it medium-term pivotal resistance at this 13,720 level. So if we could start to see a breakthrough below 12,765, that's an intermediate support level. So potentially Nasdaq 100 could see a bit of a further slide potentially towards the lower half of this ascending wedge support, which is coming in at the 12,300 level.
Now, Kelvin, on that note, thank you very much for your insights and thanks for coming on the show.
My pleasure.
We've been speaking to Kelvin Wong, Senior Market Analyst at Oanda on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.